Okay, good morning, everyone. Welcome to the webinar on Understanding Latin America's K-shaped recovery. My name is Maciel Núñez, and I'm a Senior Manager from Client Services at Frontier View. Before we get started, I realize that some of you might be new to Frontier View, so I thought I will take a couple of minutes to provide you with a very quick overview of our firm and how we work with executives at major multinationals. So Frontier View is a global market intelligence and advisory firm that provides tailored solutions to power strategic planning, market monitoring, and international growth for clients across the healthcare, B2B, consumer, and technology sectors. Our dedicated teams across North America, Latin America, Europe, Middle East, Africa, and Asia Pacific serve as advisors and trusted partners to over 4,000 business professionals at 200 of the world's leading multinational companies. We do this while delivering the market and industry knowledge our clients need to succeed at all points of the business cycle through our unique strategic intelligence and service model. If after this session you would like to learn more about us, please visit our website at dockerfrontier.com. Additionally, I am very excited to also invite you to learn more about us through our Frontier View mobile app, which we launched earlier this year, and I couldn't be more excited that it's now available to you. Frontier View mobile app is a market monitoring solution that has been built for global business executives such as yourself, and which provides you with an access in real time to our market intelligence, curated news, and expert analysis on business implications. So we invite you to download it today, and you can do so through the Apple Store or through Google Play. So with that very brief overview, it is now my pleasure to introduce you to our presenter, Pablo Gonzalez. Pablo is our Managing Director for Latin America Research. Pablo, thank you so much for joining us today.
Thank you very much, Maciel. It's a pleasure to be here with everybody.
Fantastic. Thank you so much. So now let's get started. The structure of the webinar today will consist of a 45-minute moderated discussion where we'll be covering the topics that you can see on your screen, and this will be followed by a Q&A session. So Pablo, perhaps you want to share with us a little bit more details about the agenda for today.
Perfect, Maciel. So I'm going to devote the first few minutes to talk about what to expect from an economic recovery standpoint in LATAM. So we're going to be looking at our GDP growth forecast, growth in different markets, etc. Secondly, I will want to help companies understand where the opportunities will be at the country, at the industry, at the company, even at the customer segment level. And that's why we chose the title of today's session, K-shaped recovery, because it's really going to be a tale of winners and losers over the next few months and years. And finally, we'll share with companies here with us some actions to take to emerge more strongly from the pandemic. So that's the agenda. It should be very interesting. And yeah, very much looking forward to going through the content with everybody.
Fantastic. Thank you for sharing that. I'm very excited about this agenda you prepared for us today. There's only one thing I would like to add before we continue. So, and this is for the audience. If at some point you have any questions throughout our discussion regarding any of the topics that we will cover today, please send them to us. You can do so through the Q&A box that you're going to see on the right-hand side of your screen. And once you submit those questions, we will do our best to ensure that they are addressed through our Q&A session towards the end of this webinar. So with that said, now I wanna make sure we get the conversation started. And I wanna get the conversation started, Pablo, by asking you my first question. So something that we can agree is that COVID-19 has brought us a lot of volatility and uncertainty, which has caused multinationals to struggle, particularly to plan and to predict what the recovery will look like. Hence, my question to you is exactly that. What is your view on the Latin America's recovery from COVID-19? And do you think it will be much different than the rest of the world? Or at least, will it be much different in relation to other emerging markets?
Perfect. Thank you, Maciel. So The first thing that we need to note is that LATAM is reopening with the cases not fully under control. It is true that the number of new cases, the number of deaths have been decelerating over the last few weeks. But if you compare LATAM to other countries, like the worst hit countries in Europe, the US, we're dealing with per capita metrics here that are actually higher, and we have Peru as the worst hit country right now in the world on a per capita basis, right? So right now, if you look at hospital capacity, ICU capacity in LATAM, it's manageable. It never went totally out of whack in most of the countries. But if you look at what's going on in Europe with the second wave and with new cases everywhere, it just offers a cautionary tale as to what could happen in LATAM over the next few months, right? And one thing that LATAM will be in a disadvantage against other regions is the fact that LATAM is not conducting as much testing and tracing than other countries, and doesn't have the capabilities of isolating people in hotels like what China has been doing, South Korea, etc. Right? So this is just to say that if there's a second wave, LATAM will not be much better prepared than what it was back in March. The one thing that has definitely changed is ICU capacity, with most countries in LATAM significantly expanding the number of beds. In certain cases, like in Peru, multiplying the number of ICU beds by 5. In the case of Colombia and Chile, they doubled the number of beds that they had. In Argentina, they increased it by 36%. So that has been really the strategy in LATAM, right? But if you're not testing, if you're not tracing enough, what that leaves you is with the hammer as the only strategy to contain future waves, right? So right now we're not forecasting imminent lockdowns in LATAM because, again, the situation is under control relative to what it was back in March. Excuse me, not back in March, but rather actually May, June. That's when the situation was worse in LATAM. But we're gonna have to coexist with restrictions, right? Until we get that vaccine and all Latin Americans are not necessarily fully vaccinated, but we've reached herd immunity in LATAM, right? So this is when we're talking about that 80% economy, right? We're not gonna get to the 100% economy anytime soon, probably not until 2022. And if you're wondering why we're not expecting imminent lockdowns beyond the sort of epidemic metrics that we need to look into, there's been some changes in LATAM, right, relative to where we started, and I already alluded to the expansion in ICU capacity. But I think the other thing that has really changed in LATAM is really market sentiment, right? We need to remember that back in March and April, those presidents that were more stringent in trying to contain the pandemic, like Vizcarra in Peru, Piñera in Chile, Duque in Colombia, their approval ratings actually increased. But then the months passed, we started to see the economic impact on jobs, on households, and then the tide started to change. And right now, what we see is governments putting the emphasis on economic recovery away from pandemic control, which is just to say that LATAM cannot afford to sustain the same level of lockdowns that it sustained during the first wave of the pandemic. But again, I just want to say here that we need to be very careful with new waves, because that's really happened in Europe. I don't see why it will not happen in LATAM. Having said that, it's also interesting to just look at the forecast revisions we've made in LATAM, right? So the big revisions obviously happen when the pandemic hits the region. And since then, we've made several forecast revisions, and not necessarily all to the downside, right? So those countries that saw downward revisions are countries that had to expand those lockdowns or social distancing measures, which actually render the stimulus plans that have been implemented more insufficient. And one thing that I want to mention is that no country in LATAM will spend enough money to sustain companies and households to an extent in which you're avoiding structural damage, right? I'll show some fiscal spending numbers in a few minutes, but LATAM does not have the fiscal capacity, right, to enact stimulus plans like what Germany is doing or what the US will probably do, right, in the next few months. So this is where you see Colombia's downward revision, Peru's, Argentina's revisions as they were extending those lockdowns. That also happened in tier 2 countries in Central America and the Caribbean and smaller markets in South America. So you see here the massive revisions we've made to Panama, Costa Rica, Guatemala, etc. But on the positive side, we also revised Chile and Brazil up. So Brazil has been the pleasant surprise within all the trepidation that we're seeing in LATAM, with probably the best structured economic relief plan, and that showed in Q2 numbers that were better than expected on better than expected unemployment numbers in Brazil. And in the case of Chile, it has to do with a measure that was implemented by the Chilean government that allowed Chileans to tap into 10% of their savings, which provided a short-term boost to consumption in the months of August and September. And before we pause for a question, it's also interesting to look at what has happened at the industry level in different countries. And here we can start talking about winners and losers, right? So all the industries that depend on social interaction have suffered the most, right? So if we look at hotels and restaurants, transportation, and communications, there's no surprises here. You see, by the way, that Brazil was not as badly hit as other countries, because Brazil's lockdown was never as stringent as the lockdowns we saw, for instance, in Peru. The same you could say about Mexico, which also has a federal system where social distancing measures were decentralized to the states. You see here construction, every country falling, but at different degrees, and certain construction activities were allowed in certain countries, even during the lockdowns. And then you see manufacturing as well falling in most of the countries, but many manufacturing activities were deemed essential, right? And this is why you don't see manufacturing falling as much as, say, hotels and restaurants or transportation. And then in terms of winners, you see the banking sector, you see the agricultural sector, based on the massive growth in food processing and supermarkets, and also exports to China, for instance, that really helped the agribusiness sector in places like Brazil. And then in terms of the extractives, you see interesting dynamics here where mining in Chile actually increased during the pandemic, and so did Brazil's mining output, although Brazil's number is a little bit tricky because we're comparing H1 with H1 in 2019, when the Brumadinho incident happened in Brazil, right? So the mining output, or the base of comparison, is just lower. So I'll talk about where we expect each of these industries to go moving forward. But I think we're going to be launching the first question for today.
Yes, Pablo, thank you so much. I think this is really interesting, especially the analysis you're giving us through those industries. But I really would like to hear from the audience. So, I see that we already have our first polling questions. So as you can see on your screen, the question is, how has COVID-19 impacted your business relative to your own expectations when the pandemic hit? Much better than expected, better than expected, as expected, worse than expected, or much worse than expected? Please select your answer through the screen. And Pablo, let's give it a few seconds to see, to allow the audience to respond.
Mm-hmm.
Very curious to see what the response is. Interesting. So, Pablo, my question goes back to you. I wonder if, when you look at these results, do they surprise you in any way? Is this what you were expecting in terms of responses?
So it does not surprise me, but because this is not the first time we ask this question, right? We've been asking this question with heads of LATAM in a couple of events, and I was first surprised to see that the bias is actually to the upside, right? Like there's more people than not that said either as expected or better than expected. And I would say that bias was more pronounced towards better than expected in those events that I'm talking about, right? And I think it does make sense because if you think about economic crisis, multinationals tend to have the upper hand relative to local companies just because they have a bigger financial muscle. They can tap into financial markets more easily. They could receive or tap into corporate funds. And some multinationals have actually increased their investment during the pandemic, which should help them gain market share, right? So it's a great opportunity in every crisis to gain market share and steal out market share from local competitors that are often struggling much more than multinationals.
Right. So interesting that you mentioned that. I think also this leads me to my next question, right? So we have now assessed a little bit better, right, the impact of COVID-19 on companies. So I wonder, my second question to you is, what type of recovery should multinationals brace for the next few months and for the next few years?
Perfect. So in terms of recovery, right, we don't have to wait much to start to see recovery just because Q2 was so horrible, right? With most countries in not most countries in total lockdown, many countries in total lockdown, but really activity was at very low capacity, right? So we just need to reopen certain economic activities to see quarter-on-quarter growth in Q3. And as economies continue to reopen into Q4, we should also see positive growth momentum in this last quarter of 2020. But if you look at our forecast, our quarterly forecast for 2021, what you see here are flat lines, which is just to say that we're not expecting a very strong recovery, right? It's going to take a long time for us to get back into 2019, and I'll show those numbers in a minute. And when you're doing your planning for 2021 and you're relying on forecasts like ours, it's just important to remind people of the statistical effect that the 2021 numbers are masking, right? So in a normal year, you look at these numbers on the right and they look pretty high, but again, it's just that the drop in 2020 will be so unprecedented that it doesn't take too much economic activity to get over 3 or 4% next year. And when you extend these lines, and this is what I was talking about, when you extend these lines, what you see here is the recovery in 2021, but you're still very much below where you were in 2019. And it takes LATAM really until 2023 for Peru, Colombia, Chile, and Brazil to recover 2019 economic activity levels. And it takes one more year for Mexico and Argentina to get there. The reason for that is just, it's simple, right? And sometimes it's just, appalling to think that how much economic growth you can lose with 2 months of inactivity. But I think this just talks to how transactional, companies are, and how little liquidity cushion many companies and households had at the beginning of this pandemic. And we need to remember that LATAM in 2020, we were not forecasting super strong growth, right? We were at 1.4%. This is very low in relation to historical numbers in LATAM. So this is just to say that LATAM's situation was already fragile prior to the pandemic, right? And now with the pandemic, even though government stepped in, there's going to be companies that will go bankrupt. They either already went bankrupt or they will go bankrupt when stimulus plans expire and those liquidity injections expire. This will slow employment recovery. Factors 1 and 2 will lead to lower confidence levels for a long time. And we need to remember that all governments are spending beyond their means, which means that at some point they will have to conduct austerity, to put their fiscal situation, back in order. which will slow down recovery, not necessarily imminently, but at least over the next 4 years. And then when you take into account that factors 1 through 4 would also happen in China, in the US, in Europe at different degrees, we're talking about an export-led recovery that we think will happen, but will not be sustained or will not be strong enough over the next few years to be, a true upside for the region. And when we're talking about bankruptcies, we don't have good bankruptcy data in LATAM, but we're getting unemployment data. And I think unemployment data is a good proxy for bankruptcies when you look at how many people have lost their jobs, right? So again, there's two types of layoffs. Either your companies are downsizing and you get furloughed, or you lose your job, or maybe your company went out of business. And if you look at the massive unemployment numbers in LATAM, you must assume that many SMEs in LATAM have gone out of business. And starting from left to right, we don't have Q2 numbers for Mexico, but we know that only in April, Mexico lost 12 million jobs, formal and informal. That's a 21% contraction versus March. If you look at Argentina, this number, we need to take it with a huge grain of salt, because right now it's illegal to fire in Argentina on the grounds of COVID-19. That measure was going to expire in September, but it was expanded through the end of the year. And then if you see Lima metro, we don't have Peru numbers. The Peruvian Statistical Agency, they just give us Lima numbers, but you can see here that just the city of Lima lost almost 50% of the jobs that it had prior to the pandemic. Chile lost more than 20% of the jobs that it had. Colombia lost 20% of the jobs. That's 1/4 of Colombia's labor force. And I would say here, the one country that I think has sustained or weathered the pandemic the best has been Brazil, which has only, quote unquote, lost 11.8% of the jobs that it had prior to the pandemic, which is very similar to the US. And I think this is very impressive because, as we will see, Brazil didn't have the fiscal capacity, definitely not the fiscal capacity that the US had, but nonetheless, they've been able to stave off a lot of bankruptcies and unemployment. And going to your question, your fair question, Maciel, about whether LATAM was going to fare better or worse than other emerging markets. This chart tells it all. You can see that LATAM will only recover 2019 levels in 2023, but you see APAC, Asia Pacific, already recovering those levels next year. You see North America, Central and Eastern Europe, Middle East and Africa, Sub-Saharan Africa recovering those levels already in 2022. Only Western Europe will take longer to recover. And by the way, if you were to take out the UK from this metric, then Western Europe would also be recovering in 2023, right? So you have the UK number pulling the number down for Western Europe, right? So this is one of the things that it's always complicated for heads of LATAM when they're trying to make the case for corporate investments in the region, and this year will not be any easier, as you can see here. And then the last two things that I'll say before we pause again is that everything that I've just said is our base case for the region, but we should be ready for pretty big swings in what actually happens, right? There's just too much uncertainty right now when it comes to second, third, fourth waves of the pandemic, where we're going to get a vaccine. When do we get the vaccine? How does it get distributed in LATAM? How much fiscal capacity or how much more fiscal capacity will different countries in LATAM have for, to sustain new lockdowns? And will they want to put their countries in lockdown again just based on the economic impact of the first lockdowns, right? So here we have this conceptual graph. It's called the hourglass of uncertainty. And whenever there's this type of uncertainty, what you get is a wider cone of uncertainty over the short run. And then the cone of uncertainty narrows as we get into, say, 2023, etc. So this is just to say there's much more uncertainty as to what will happen in 2021 and 2022 than it is about what will happen in 2023 and onwards, right? And looking at this with concrete numbers, here you have our weighted average forecast for LATAM. So this is GDP growth in real terms. And you see here how even for 2020, there is a wide variation between an upside and downside forecast. You see that the same type of variation between our upside and downside here in 2021. And then you see how these lines, they start to converge, right, moving forward. And the last thing that I will say here, if you look at our bias, we don't see a lot of upside opportunity for LATAM, right? Our bias continues to be to the downside moving forward.
Okay. Thank you, Pablo, for this. And going on this conversation about the recovery, I would like to ask a second polling question. And for the audience, please know that this specific polling question we want to, our objective is to evaluate whether your own timeline for recovery is aligned with the macro recovery that we're expecting for Latin America. So the question for us is, when do you expect to sell as much as you did in 2019 in the markets that you cover? So thinking in local currency. So the answers are already this year, 2021, 2022, 2023, or 2024 or after. Again, let's give it a few seconds, and I'm very curious to see the answer here, Paulo.
Yeah, it should be interesting.
Mm-hmm. So interesting. This is what I was curious about. So I find that if you look at the answers, I find it interesting that there are more companies than not that are expecting to outpace economic recovery. So what do you think? Why do you think this could be the case, Pablo?
Right. So I have a few hypotheses. One, I feel more strongly about the third one, but let me just give them to you, right? So number one, it can be that companies in LATAM or multinationals that operate in LATAM, they tend to be, or they tend to be selling to more resilient customer segments. So that's number one. Number two, it could be that 2019 was not particularly a great year, historically speaking, for these companies in the region, right? So it doesn't take much time to get back to 2019. So a good example of this would be Chile, right, where Q4 of last year was pretty bad. But for me, the hypothesis that I have that I feel more strongly about is really inorganic growth, right? So right now there's a lot of distressed assets in the region. So local valuations have decreased in local currency. We're dealing with undervalued currencies in LATAM. So this is just the perfect opportunity to grow inorganically in LATAM, right? So if you're going to buy a competitor or buy a distributor to go direct, it just takes you shorter to reach to those 2019 levels.
Fantastic. Thank you for sharing that. I was very curious to hear those hypotheses from your end. So I think so far we have stayed at the macro level, and we have made some interesting comparisons against companies' expectations. So I think that one of the reasons there might be a misalignment between the macro and what our clients' expectations are might have to do with this term you've mentioned a few times throughout the session so far, which is the term of winners and losers. So my next question here, Pablo, is help us understand, will the recovery feel the same for all industries?
So definitely not. And again, this could explain why certain, or the people who took the poll might feel more optimistic, because maybe they're selling into those winners, right? And the first thing that we need to talk about is this concept of K-shaped recovery. What do we mean by that? And in the US, people are very familiar with this concept of swoosh-shaped recovery. I didn't even know how to pronounce it correctly. You could say asymmetric V recovery as well. And the concept of K-shaped recovery, you can see here on the right, this is also a conceptual graph. It's not displaying what will happen in LATAM, but it does show sort of the type of growth that a winner and a loser would see, right? So with losers, falling much more during the crisis and taking longer to recover, and with those winners taking less of a hit and having a faster recovery. And we also know that certain companies actually grew during the pandemic, right? So for them, is how do you sustain growth momentum moving forward? And when you look at the K, right, with the winners and the losers, we can talk about winners at the country, at the industry, at the company, and the consumer segment levels, right? So I'm going to be talking about each of these four, but just to summarize, in terms of the countries that will win in LATAM, these are countries that are implementing a good balance between stringency of lockdowns and government stimulus. This is why Brazil, for instance, has seen better economic performance than the rest of the countries. And this without talking about the death toll, right? Which we know has been high in Brazil. The second component is low political and social instability. We know that social unrest stayed muted for most of the pandemic just because people couldn't take the streets and protest again. But as we left social distancing measures, we know that political instability is just going to go up because of rising inequality, right? And this could delay recovery in certain countries or help certain countries with recovery if they can maintain social peace. And then we need to have a view on how reliant each of the countries are on tourism and remittances, right? Which we know will take some time to recover. At the industry level, at home consumer goods and services, IT solutions, those greatly benefited from the lockdowns. Moving forward, what we think is that countries will choose their national champions, right? This is a concept that everybody knows in Brazil. Companies will probably try to give tax breaks to those sectors that are deemed strategic for the country and also in terms of their power to create jobs. And if you're providing tax incentives to certain industries when you don't have the fiscal capacity, that probably means that you're raising taxes or ending tax breaks for other industries that would be on the losing side. And here you have, if you look at here at the bottom, you have energy, capital goods, big ticket items, travel and hospitality. Those are the sectors that have suffered the most and will take longer to recover. And then at the company level, this ties very nicely to the point I was making about multinationals being more resilient during the pandemic, having a great opportunity to expand inorganically, and it has everything to do with their access to finance, or access to capital markets. How easy will it be for companies to tap into working capital lines? And what we see is that small companies will probably see banks cutting working capital lines or making those capital lines smaller, right? So they can be pushing them closer to bankruptcy, right? So big companies doing much better than small companies. And then at the consumer level, sorry, you have white collar service workers, high net worth households, and then the opposite side, you not only have blue collar manufacturing workers, and that's the concept of blue collar workers that we're familiar with, but you also now have blue collar service workers that are very vulnerable to new restrictions in the services sector, and obviously low net worth households that didn't have as much savings as upper middle class people. So what I'm going to do right now is just to go one by one, and starting with countries. As I say here, right? So you need to have a view as to how stringent the lockdowns were during the pandemic and how stringent within that lockdowns will be moving forward. Within that, LATAM will probably follow the same path as Europe, where there's going to be restrictions, but they will try to avoid those confinements due to the same level that we saw during the pandemic. But then the most important thing is, if you're asking people not to work, if you're asking companies to close or to reduce their capacity, you're gonna have to inject liquidity, right? So they don't go out of business. And this is what I was telling you, that in LATAM, we don't have the fiscal capacity to implement the same level of stimulus measures that were implemented in countries like Germany, Italy, Japan, and the type of stimulus that the US could implement if the US Congress reaches an agreement on a second economic relief package. And here in LATAM, you see Peru and Chile and Brazil implementing the most aggressive stimulus in the region. But if you look at what's the ROI of the stimulus, I would say is being higher in Brazil, just because Brazil was in lockdown for a shorter period of time, right? So you get more bang for your buck in Brazil than you do in Peru and Chile. Then the other thing that I mentioned is social and political instability. And this is something that will play negatively for Chile moving forward because of the constitutional vote that they have in October and just the constitutional reform that is going to span for at least a couple of years. And you see in Peru where President Vizcarra was almost impeached, we have elections next year, and they should keep consumer and business confidence muted. And then on the other side of the spectrum, we have companies like Mexico and Colombia that chose not to spend too much money. In the case of Colombia, because they were trying to avoid losing investment grade, and in Mexico for ideological reasons by AMLO's administration, right? So this is what we're concerned about Mexico's bankruptcy numbers, because we haven't gotten Q2 numbers for unemployment. We don't have good data on bankruptcies, but we know that the private sector in Mexico has been, lobbying pretty aggressively for more stimulus that hasn't really come. So that's at the country level, and again, we feel optimistic about Brazil the most in terms of that recovery. At the industry level, right? We need to understand how different industries are exposed to external demand, government stimulus, and customer behavior, shifting customer behavior, right? So if we start talking about customer behavior, this is why retail fast-moving consumer goods had such a good year, as people were shifting away from on-premise to off-premise, going to supermarkets, away from restaurants, because we don't think that we'll reach herd immunity in 2021. We think that many people will continue working from home, and this will be a driver of outperformance for fast-moving consumer goods. Now, if you look at external demand, this is why we have a more optimistic view on mining than we do on oil and gas, just because copper prices have recovered much more quickly than oil and gas prices. And we need to remember what's the ultimate driver of mining and oil and gas. We know that for oil and gas, 40% of the demand comes from transportation, the use of cars, airplanes, etc. And that's definitely gone down, and it will not recover to pre-pandemic levels in 2021. Whereas in the case of mining, we have the steel sector in China, the housing sector in China, pushing mineral prices up, and we know that China has recovered more quickly from the pandemic. From a government stimulus standpoint, I already talked about national champions, right? So if you're in Brazil, we know that the automotive sector and the beer sectors will probably get better treatment than other sectors in that country. In Mexico, the energy sector, the infrastructure sector will also get a better treatment. But most countries will probably try to use civil works, or most governments, to create jobs, right? So this is why we're more optimistic with new civil work construction than we are with new residential and commercial construction. And we say new because in the case of residential, we know that people will continue to invest in renovating their house, especially if they're white-collar workers that continue working from home and they just want a more comfortable space for telework. And then here you see the other sectors that we talked about, financial services having a better time than other sectors, and obviously IT and telecom, which has served the wave of digital transformation. And then continuing with industries, right? I mean, we know that governments are key clients for many of our customers. So we also wanted to provide our view as to where we see government spending moving forward, right? So we know for sure that austerity will come at some point. Debt to GDP levels are increasing, are going through the roof in all countries, and not just in LATAM, right? So at some point, we should see spending cuts tax increases, privatizations, etc. The one thing though that we think about 2021 is that governments will try to avoid austerity just because it would kill economic recovery, right? It would be pro-cyclical. And we need to take into account that we're expecting social unrest to significantly increase in most of the countries because of rising inequality, the high levels of unemployment, and also because we have key political milestones, right? So we alluded to Chile's constitutional reform and elections next year, but we also have elections in Peru. We have midterm elections in Argentina. We have presidential elections in Ecuador, municipal elections in Brazil, midterm elections in Mexico. And Colombia doesn't have elections until 2022, but we're already dealing with a very polarized country around the peace process, former President Uribe, and the protests that we've seen during the pandemic that led to 8 students dying on the grounds of police brutality, right? So we're already dealing with a lot of hotspots in the region. And this is why we think that governments will think twice before they cut spending next year just to keep social peace. But if you're selling to the government, they will also need to signal fiscal responsibility, right? So they might not cut education spending or healthcare spending or social spending, but they might have to cut something, or they might have to again provide tax relief to certain industries at the expense of other industries, right? So we're going to see a lot of budget reshuffling in the budgets of 2021. This is why it's so important that you work very closely with your government engagement teams so you understand which are the sectors that governments prioritize and at the expense of which ones. And then at the company level, I already alluded to this point, but we know that SMEs are likely to suffer once government stimulus starts to wind down, right? So you saw the unemployment numbers in Brazil, you saw the unemployment numbers in most of the other countries. We need to be careful to conclude that, for instance, Brazil will have an easy time in 2021, right? Or just because Peru and Chile have the fiscal capacity, they will be able to foster investment and create jobs very quickly, because the reality is that there are many companies that are being maintained with a lifeline, right? They're not commercially viable right now. Demand for their products is not there. So the moment governments and banks pull the trigger and stop injecting liquidity, or just make access to finance more difficult, we know that there's going to be a second wave of bankruptcies in LATAM, right? And you see here on the left-hand side, loans outstanding to the private sector they've ballooned over the last few months, which is just telling you how much suffering SMEs are going through, right? And how they're trying to stay alive. Also because interest rates allow them to do so, right? But again, we need to see investment, we need to see job creation, we need to see final demand come back for a sustainable recovery, at least for those smaller companies. And then we have FX depreciation, right? That has compounded pricing pressures on margins with the massive depreciations that we saw in 2020. And we are expecting currencies to appreciate, but it's going to be a very gradual process, right? So if you think that you're going to be able to raise your prices and recover lost ground in 2020, if you decided to absorb the FX shock, it's not going to be that easy because of price sensitivity and because inflation levels, as you can see here, they will also remain pretty low moving forward, with the exception of Argentina, where we expect inflation to outpace FX depreciation, making it easier to pass on FX cost onto prices, right? But if you think about going back to the SMEs, if you think about your own distributors, those companies importing into the country, they're probably already having liquidity issues, and if you pass on FX cost onto them, you're either going to put them in financial trouble, or you'll see your final prices go up at the expense of market share, right? So this is a trade-off that most companies are making. And then finally, at the consumer spending level or consumer segment level, I think that there is consensus that purchasing power is getting hit, that employment will take long to recover. But I think there's less consensus about where the customer journey will land in a new normal, right? So just to give you a couple of examples, where people live, we've seen across the world people moving away from big cities into tier 2 cities or to the countryside. This completely shifts your idea of your offline channels, the type of taxonomy you need to have, if you are to think that these changes are structural, right? But just nobody knows how many people will stay in these tier 2 cities or go back to work where they used to live. The other is where they buy, right? We've seen a massive rise of e-commerce. The key question is, one, when you start reopening, will traditional trade in LATAM go back to normal? Will people choose to go back to the stores and stay away from e-commerce, or did they like e-commerce so much? Was the experience for them good enough for them to stay, right? And if you combine what I'm saying with how SMEs are suffering, we do think that traditional trade will probably lose market share against modern trade and e-commerce in the next few years, right? So there's a lot of questions here on the customer journey.
Thank you, Pablo. As we are approaching the final section of our webinar today, I want to ask a couple more questions to the audience. The next one will be the one you see on screen. So, how confident are you in your company's ability to shift its focus towards growth opportunities next year? And I also want to take a pause here while everyone responds to this question. I want to ensure that remind everyone that if you have any questions for us, you can send it through us through the Q&A box on the right side, on the right-hand side of your screen, and we will be addressing those in a few minutes. So please, if you haven't done so, feel free to send us your questions. Okay. So mostly very confident, somewhat confident. However, I see there are still some of you that are not very confident. And Pablo, my question to you is for those who are not very confident about their company's ability to win next year, I wonder what type of advice will you give them based on your own knowledge of the markets and where you're also hearing from the heads of Latin America?
Great. So I have 3 pieces of advice, and not just for those companies that don't feel very confident, even for the companies that feel confident, because at the end, they're still going to have to haggle for corporate resources at a point in which other regions will grow faster, right? So we need to really secure those resources for LATAM. So the first piece of advice that I want to offer is, if there's misalignment in your team as to where the opportunities are next year and the type of investments that we need to make, or even with corporate, we found that scenario thinking or scenario planning is a very powerful tool, right? And people think about scenario planning as, let's just cover our backs in the strategic plan and, you know, for budgeting purpose, and that continues to be a good use of that tool. But one of the good things about scenario planning is that it surfaces the key assumptions that we have in our plans, right? This, at the end, the scenarios revolve around variations about key assumptions, right? So sometimes we're going to be surfacing key assumptions where there's disagreement as to what will happen with FX, what will happen with the pace of employment recovery, things of that sort. And it also opens a safe space to challenge conventional wisdom, right? It opens room for dissent, especially in companies that are very vertical, very hierarchical, right? So if you can push for scenario planning like a workshop within your company, we greatly encourage you to do so. The second is about making the case for LATAM. We know that COVID-19 is a pivotal moment for companies, governments, society to not just adapt, but really transform the way they operate to emerge more strongly from the pandemic. And we know that there's going to be investment opportunities, right? Whether that is on digital transformation, enhanced logistics, you know, bringing supply chains closer to markets, expanding local production to create natural hedges against effects, hiring people for digital new product launches or inorganic growth opportunities, as we've mentioned several times throughout the presentation. But again, you're going to be competing against APAC and against your colleagues in APAC. If you're covering a country in LATAM that is not doing so well right now, you're going to be competing against Brazil, for instance, right? So how do you make the case for investments in LATAM? And here you see the three main reasons why a corporate might hesitate to assign resources to different markets, or the markets that I guess they don't like. One is low risk appetite, the other one is short-termism, and the third one is scarce attention, right? So here you have some, tactical advice as to how do you manage low risk appetite, changing the pitch from whether you should do something to how do we get here. Also very important for LATAM, don't overpromise and underdeliver, because that doesn't play very well with corporates. So it's better just to be cautious here. Short-termism, this is easier said than done, but the strategy shouldn't be the function of targets, but rather a target should be a function of the strategy, the long-term vision that we have for the company. And in terms of scarce attention, this would have been easier without a pandemic, but we found it very effective to bring corporate executives down to the region to visit markets, see clients, etc. Just get them more exposed to LATAM. And obviously now with travel restrictions, it's not going to be easy, but now we have digital ways to do that, right? With the huge boom in teleconferences and whatnot. The third advice has to do with transformation, right? So how do we make sure that we're really taking the opportunity to transform the way we do business in LATAM for commercial and financial sustainability, but also, to be honest with you, for planet sustainability, which I think is a topic that everybody's talking about now with the pandemic, right? And it all starts with collaboration between governments, the private sector, academia, civil society, and this is also becoming a demand from customers, right? It's not just about to get things done, but the more you collaborate, the more political power you have with your customers. And then change needs to start from within. And what we want to see is not just tactical responses that were necessary during the pandemic, but also companies thinking about what is really the strategic response to emerge more strongly from COVID-19, right? So if you think about your value prop, yes, you have to adapt your product and price for higher price sensitivity, but are you really mapping changes to customer needs and the customer journey? And from a sustainability standpoint, are you thinking about your product design to reduce carbon footprint, health, etc.? In terms of supply channels, a supply chain story is not just about managing supply chain disruption, but it's also about localizing the supply chain if appropriate, but compensating for a costlier supply chain, right? So what other changes do you need to make if you're bringing supply chain to closer to customers so your margins don't get compressed? And also about sustainability of sourcing and delivery. Stakeholder management, as I said, great expectations for everybody to collaborate. And in terms of people, it's not just about enabling telework people, keep people sane and productive, but it's also revisiting your working culture for greater flexibility, what are you going to be doing with your offices, and also it's about diversity, gender equality, transparency, fairness in the workplace. And again, this is not just about what we think that companies should do, but it's really about the new generation expecting this type of behavior from companies. And the last thing is sort of word for caution here. We know that there's sort of a hype right now with digital transformation, but we need to be careful with digital transformation because it has some drawbacks. So with telework, you can always reduce overhead costs, increase productivity, for some people improve work-life balance, but at the same time, it could be harder to infuse companies' culture. Some people might not have the means or resources to work from home or the infrastructure to work from home. And when you think about customers, how do you keep customer engagement if you cannot see them face to face, right? So we need to think about hybrid models here as well. And with this, we'll launch the last polling question and just have a short Q&A before we close today.
Thank you so much, Pablo. Please, I invite you to answer this question. Do you feel that your company has been strategic in its response to COVID-19? And as we have the participants responding, Pablo, I want to thank you for sharing this interesting and very relevant information with all of us today. From my perspective, if I had to summarize, I guess my key takeaway will be that from the discussion today that companies will have to be very, very strategic in choosing very carefully their investments for 2021. So that's my key takeaway. And with that, I want to open the Q&A session. I know we won't have time to answer many questions, but I think we might have time for one. But if you did send us a question and we don't get to it today, we will be following up with you to ensure that we give you a response. So Pablo, I'm going to ask you, I think we have time for one. So let me ask you one that we received several, but the first one I see is, given the current and near future economic environment in LATAM, do you see Chinese companies having greater success in 21 and 22?
I think that's a great question. And we've gotten this question a lot from our clients, especially on the tech side. And the reality is the following, right? American and European companies, they tend to be more short-term oriented than Asian companies, let alone Chinese companies that if they invest in LATAM, they're for the long haul. So there's definitely a concern about Chinese companies investing more aggressively now, next year in 2022, also when their domestic performance is being better, right? So they have the long-term vision and they might have more profits to reinvest. So yes, we do expect Chinese companies not necessarily to have an easier time, but to invest more aggressively and try to gain market share out of this pandemic.
Perfect. Let me ask you a second one, and then we can go to closing remarks. So the second one is, with regards to construction as a recovery-focused industry, should we see a drop in offices constructions due to the increase in home office as consequence of the new normal?
Unfortunately, yes. I mean, right now, if you think about office construction, what we're seeing is that many construction companies are really finishing many of the construction projects that they initiated a couple of years ago. And that's what's keeping the industry going. But with so much uncertainty about when will people go back to work, whether companies will change their working culture and allow, say, 30% of their employees to work from home, or certain companies are actually allowing all of their employees to work from home moving forward, is just not enough visibility into the future to initiate a lot of new projects, really. What we're going to see is more of renovations of offices. So maybe, you know, the common spaces, maybe they'll put cubicles, or more innovative companies, they'll just treat offices as places where people just go to have meetings, right? So you will not see all the spaces for people just to sit down and send emails, because they can do that from home, right? So everything that has to do with renovation and restructuring the taxonomy of those offices for greater employee engagement, for greater productivity, that's where we see the opportunity in the commercial space.
Fantastic. Looks like we're coming up on the top of the hour. So I want to thank you for the presentation today, Pablo. And I want to thank everyone that joined us, that took the time to be here. Again, if you made us a question, we will get back to you. And we will also be sharing the recording of this webinar with all the participants. So thank you. We hope you found this session insightful, and we look forward to speaking with you again soon. Have a fantastic day. And hopefully we can connect again.
Thank you, Maciel.